In this video, I want to take a look at the stock markets and follow up on a few things that I've said several weeks ago to show you how things are developing and how this can help us judge where the crypto markets are going. If you like this update, please smash the like button, and if you're new, consider subscribing to the channel. Click the notification bell so you do get future updates whenever I publish a new video. So 2 months ago, I made this video on my channel. I will link to it up above or in the description down below, where I covered the 3-day death cross on the S&P 500, and that is something that only happened the last time just before the 2008 bear market, where we had a major crash in global financial markets, and the S&P 500 dropped another 50% after that point. So in that video at the time of the death cross, you can see it was trading at $3,700. Now let's go and look back at that same chart, the 3-day chart on TradingView as it's developed today. So here we have a chart of the S&P 500. This is a 3-day chart. I've set it to log scale so that it's just easy to fit on the screen. And you can see we had that death cross over here, which is when the 50 simple moving averages crosses down below the 200. Which is in red, and the 50 is in blue. So as you can see, we go back here all the way. The last time we had that death cross was over here in June 2008. And that was when the S&P was at 1380 approximately. And you can see it ended up dropping to 680 after that, which is almost a 50% drop over there. Then we had a golden cross again, and since then we had that major bull market over the last decade or so. And we have seen, yes, the market has had wicks below this 200 moving average on the 3-day chart. You can see, but every time it got back above there, it was a major buy signal. So when it wicked below, it went above, buy signal, and it just went up all the way up. So what we've seen now is we saw that same death cross in October last year, same one as over here. And what we're seeing also is we have not yet reversed that death cross, which is a possibility. Okay, if the market trades here and it continues going back higher and it continues to new all-time highs, what would happen is this would simply be reversed and the market keeps going up. So we're in a position where the next couple of weeks or the next couple of months are going to be very crucial to telling us where we are going with the market. If we can get back above the 200 moving average here on the 3-day. So if the S&P 500 gets back above there, so above 4,100, there is potential actually for this just to continue keep going higher and maybe even go to new all-time highs. But as long as we're below here, we are still in a scenario where we could be seeing a major crash later this year or in 2024. And just to zoom in over here, areas that are important to see is we had this death cross, okay? We had the rally, which often happens at the point of the cross. Short term, it tends to be overextended and it actually snaps back to the 200 average here, which is exactly what it did. It went there, it pulled back down. We got a wick back above here, take that liquidity, and since then it is back down. Now we have seen a rally over the last week or two. You can see this little move up, but so far we are still below this 200. So for me, key here is the 200 moving average on the 3-day. If we can get back above there, above 4,100 with 2 consecutive 3-day candle closes, then we could start to consider a more bullish scenario where we might see an extended rally to the upside and maybe even to the all-time high or above. Until then though, if this gets rejected at any point below the 200 here, there is potential for a major sell-off. Now you can see over here, maybe it's creating an inverse head and shoulders, right? Where it's inverted like that and it's going to continue higher. That is a possibility. So we have to see, is it going to continue higher and then continue up like this? Or is this a fake out? Does it get rejected here? And do we see a major move to the downside? Another thing that I have shared in the past before on videos here on the channel is the correlation of interest rates to market crashes, and especially the rate cuts. So once the Federal Reserve stops raising interest rates and actually starts cutting them, it is usually followed by a major sell-off, as happened over here. You can see it happened in 2000, it happened in 2008. They did it a little bit over here before the March 2020 sell-off, although I don't think you can really count that. That was also with the health crisis. And now we are still at a point where they have been raising interest rates, and they are saying there's not much likelihood of rate cuts in 2024. And usually, you know, when they say something with certainty, the opposite could be happening, and we could actually start seeing rate cuts later this year. And if that were to happen, we would have the danger of another major sell-off, as has happened in the past. Okay, obviously no guarantees, but that is something I'm watching for. So if they start to change towards creating rate cuts, if they start to talk about the possibility or actually cut the rates, that is when things start to get dangerous for the global financial markets. And of course, if the global financial markets sell off, it's highly likely that crypto is going to continue to sell off even more. So I'm covering the stock market here, but that is because it is very much related to crypto. And I think it's important to keep an eye on the global financial markets to be able to gauge the direction of crypto. So you can see here the red bar pattern. This is just an idea. Do we get a major rally where we get above that 4,100? Do we rally all the way up to new all-time highs in the next 3 to 6 months? And then they start cutting rates and it just crashes and falls off a cliff? That's a possibility. No one is really expecting this. Everyone has been incredibly bearish here towards the downside, expecting an immediate breakdown. As we know, markets like to fool most of the participants most of the time. So what would people not be expecting? A major rally to new all-time highs. Most people are saying, no way, that's not possible, blah, blah, blah. So that would be the contrarian play. And if they pump it and it goes up and up and up, a lot of people who are betting to the short side are going to be forced to close their positions, which would add even more fuel to that rally to the upside. We could see it rally very quickly, like I said, 3 to 6 months. Then people are going to start to FOMO in, saying, hey, there's no more risk of a bear market. We're just going up only. A lot of people are going to start buying back in towards this very top, especially if it manages to go to new all-time highs, because then everyone gets euphoric again. They buy in at the top. They start cutting rates. The market dumps, and everyone is caught off guard because they're no longer bearish. In fact, they all flipped bullish. Okay, so that is a possible scenario I am watching for this year. And of course, if this happens, then we might be looking at a scenario which is a repeat of 2019 for Bitcoin, where we saw a major rally from January to June in Bitcoin, where it went from 3,000 to approximately 13,000. Okay, if something like that repeats, we might see Bitcoin have a major rally where it goes into 30,000s or 40,000s before completely rolling over. Again, just a possible scenario. I will actually make a video on that later this week about the possible scenarios for Bitcoin that it could follow this year. But let's get back to the S&P 500. So before I showed you the 3-day chart and the 3-day death cross, that was important to keep an eye on. What we're looking at here now is the weekly chart of the S&P 500. And again, I think it's always very important to look at multiple time frames. You want to look at the monthly, you want to look at the weekly, you want to look at the 3-day, the daily, and then all the way to lower time frames for precise entries and exits. But you want to look at the larger time frames for the direction of the larger trend. And what I do really like to use is the 50 and the 200. So the 50 simple moving average in blue, the 200 in red over here. They are just very good larger scale indicators of the trend, and they don't catch tops and bottoms, but in general they are a very good guideline to be able to help you determine, what kind of stage of the bull market are we in. If we're above the 50 over here, you can see that is full-blown bull market territory. We drop back below there, but as long as we're above the 200, we're still in bull market, but this can just be a pullback or a setback or a correction. We get back above the 50, you can see full-blown bull market. It drops to where? Exactly to the 200. Bounces again, gets back above here, makes a new all-time high, drops. And this was when it went below it. This was scary. This was March 2020, and it was unusual. It snapped back, got back above the 200, got back above the 50, and then went all the way to new all-time highs. And when it broke below there, it went exactly to the 200, and it bounced. But now it's being rejected. So let me zoom in on there more, because this is important to keep an eye on. You can see it's been rejected by the 50, it went to the 200, got rejected again by the 50, and you can see now the 50 and the 200 are coming closer and closer together. So that means at some point a decision in the direction of the trend has to be made. Is it going to break up, or is it going to break down? And of course it can continue to chop around here. It can continue to break out, give a false break, drop back below, give a false break, and then it can continue to trick people. It can trade sideways for a year. That's also very much a possibility. But what I'm looking for here also on the weekly chart is I'm looking for a reclaim, a close above the 50 over here to help determine a bullish confirmation, or a breakdown below and a close below the 200. And as you can see, even though it wicked below here back in October last year, it did not have a full body close below it. So this was just a liquidity grab or a bear trap, whatever you want to call it. Over here, the same thing. You can see it wicked above it a little bit, but it didn't close above it. So right now we're still below this, and we're going to see a direction at some point. Okay, tomorrow we have the CPI, the inflation data. Maybe that creates a big move, but keep an eye on these two averages to see what happens. And like I said, also on the 3-day chart, keep an eye on that $4,100 level. If we get back above there, maybe there's a chance we start a new bullish trend and a short squeeze or a bear market rally, whatever you want to call it, to the all-time high or above. But stay on alert for any signs of the Fed starting to talk about rate cuts or actually cutting rates, because in the past, as I've shown you over the past 20 years, that has every time led to major sell-offs in the next 6 to 12 months following the start of rate cuts. So if we do start to see rate cuts, is that time going to be different, or is it going to follow the previous times, the previous data? And I think the chance is high that it follows the previous data, which means if we get rate cuts, it is likely to be followed by a major sell-off in the markets in 6 to 12 months following the date of those rate cuts. So keep an eye on this $4,100 level. It is the 200 moving average on the 3-day chart. If we get back above there, things start to look interesting. If we reject over here, it could also start to get dangerous. But that is where we look at the weekly chart. And if we start to get a weekly close below this level, so say below 3660 on the weekly, if we start getting closes below there, things start to look dangerous for a potential major sell-off in the markets too. So right now it is a bit of a waiting game, but be prepared for both scenarios, and whatever the chart shows us that it wants to do, that is probably the direction that it's going to go in. Hopefully you enjoyed this update. If you did, smash the like button, make sure to subscribe to the channel, and I will see you in the next video.